Well, Asian markets are more or less flattish. The Japanese market, in fact, was flattish. Remember, all eyes now are whether or not President Trump and Xi Jinping, they can call a truce and, in fact, ease world trade tensions. For the time being, the Nikkei is as flat as can be. The yen has shown some strength as well, which is not very, very good news for an export-oriented economy. But let's pull up the other couple of markets. The Kospi as well is holding mildly in the red, and the Straits in the Taiwanese index, that in both those two markets just opened up. The Taiwanese index, in fact, a relative outperformer, indicating a gain of around 0.5%. Remember, for the Nifty, we're coming off a splendid series. It's the best series we've had since March 2016. But for starters, it's indicating, let's pause a bit, it'll be more or less flattish to kickstart trade.
Well, yes, and as you mentioned, all eyes on Argentina as G20 leaders arrive at the summit due to start later today. Now, remember, it is one of the most difficult meetings in recent memory, with the trade being the most pressing issue when it comes to the global factors. Our colleague from CNBC filed this report from Argentina itself.
World leaders gathering in Buenos Aires, Argentina on the eve of the G20 summit here in South America. This will be the first time the G20 has been in South America. It's also going to be the first time that President Donald Trump has traveled to South America. So much focus on the president and the president of China, Xi Jinping, and whether or not they can cut a deal. But of course, President Trump will be meeting with as many as 8 foreign leaders during the course of his visit here. The question with the United States and China is, can they break that trade tension that's happened over the course of the past 8 to 9 months or so? That situation worsening with the rhetoric increasing on both sides. Global financial markets have been focused on this G20 event as the place where we could see a breakthrough for a deal. But skeptics suggest that maybe a deal is not in the offing here. Maybe the best that global financial markets can hope for here is simply a trade truce in which both sides would agree to stop raising tariffs on each other. A lot of other storylines to watch here at the G20, of course, including Saudi Arabia. Mohammed bin Salman is going to be here. The EU officials are concerned that there might be new tariffs coming from the United States. And then, of course, North America, that trade pact recently agreed to by the United States, Canada, and Mexico, that could be signed here on the sidelines of the G20 as well. So a lot to watch for over the next 48 hours through Saturday night. And that's when we expect to see that big dinner between Xi Jinping and President Donald Trump.
Well, however, some mixed messages came in from Donald Trump on the potential call with China. Now, on one hand, he says he's close to reaching a deal. And on the other hand, he is also bringing in China hawk Peter Navarro to the dinner. Eunice Yoon joins in with more. Well, Eunice, we know that Donald Trump likes to keep people guessing. So is this a negotiation tactic?
It certainly looks like that. But as as we were just talking about, President Trump definitely likes to keep everyone guessing. And I think that would include the Chinese as to whether or not he's actually going to follow through on a trade deal. So he was speaking to reporters before he got on the plane to Argentina. And this is what he said.
I think we're very close to doing something with China, but I don't know that I want to do it, because what we have right now is billions and billions of dollars coming into the United States in the form of tariffs or taxes. So I really don't know, but I will tell you that I think China wants to make a deal. I'm open to making a deal, but frankly, I like the deal we have right now.
So President Trump is expected to sit down for dinner with President Xi on Saturday night. The list of attendees is still reportedly being finalized. However, CNBC has learned that White House advisor Peter Navarro is going to be at that dinner, and that has raised a lot of eyebrows and concerns that that might mean that there won't be any sort of deal. And that's because Peter Navarro is really seen as a fierce critic of China, and from the Chinese perspective, seen as somebody who doesn't necessarily want to see a trade deal, but instead wants to contain China. So there's been a lot of speculation as to exactly what the two sides will be able to achieve. The Wall Street Journal was reporting that the two were talking about some sort of architecture for a trade arrangement that, once that architecture is put in place, would be able to help stave off tariffs from Washington at least until the spring.
Well, yes, President Donald Trump definitely keeping us guessing with his latest statements. But we talked to a whole host of experts on the matter on what they are expecting from this crucial Trump-Xi meeting in Argentina over the weekend. Hear out what they had to say.
I think the stakes are high in that the market's now sort of pricing in some sort of a ceasefire, some sort of a soft agreement. And if we don't get that, then obviously there'll be a lot of disappointment. But I suspect that we get some sort of a ceasefire. And I think the bigger story here is this, that no matter what happens at the G20 this weekend, we are in an extended era of deglobalization, which really means that this is death by 1,000 cuts. So it's not as if there's one event which is going to change things either for the better or for the worse. But this is a steady war which is going to play itself out over the next few years. And we've got to think about the implications of that for the global economy and who could possibly lose and even benefit from this era of deglobalization.
I think that everyone would win if we are able to get into a position where we hold off on further tariffs. Better yet, remove the tariffs that are in place associated with the 301 activity. The 232 associated with steel and aluminum, that's not a China-specific or a bilateral issue. But the 301 tariffs are China-specific, right. And what would be success is getting rid of those tariffs, or at least postponing the imposition of additional tariffs.
The president is keeping everyone guessing, and he's basically preparing the public and the business community, not just in America, but all around the world, for no deal. Because he's saying that while he wants to engage in a deal with China, he's very happy with the way things are right now. And so we're just going to have to see. At most, because there have been really no substantive negotiations over the last several weeks or months, at most, there might be an agreement for the president to withhold further tariffs, not adding to the tariffs already imposed on some $250 billion worth of goods coming from China, in exchange for discussions over the next several months.
Meanwhile, President Trump has abruptly cancelled his meeting with Russian President Putin 2 days before they were scheduled to sit down on the sidelines of the G20 summit. And the meeting was called off on Russia's refusal to release Ukrainian Navy ships and sailors that were seized during a maritime confrontation between the two countries on Sunday.
Okay, let's move on and see how the Wall Street closed yesterday. The market there ended lower as investors shifted attention to the meeting between President Donald Trump and Chinese President Xi Jinping amid some skepticism whether the two leaders can reach a consensus on trade. Now, major indices traded higher following the release of the Federal Reserve minutes, as well as the comments coming in from President Donald Trump. But they gave up most of the gains by close, given the fact it was understood that White House advisor Peter Navarro would also be attending the dinner. The Dow Jones snapped a 3-day winning streak. The S&P 500 slipped a tad bit, down about 0.2%, and Nasdaq as well dropped 0.25%. CNBC's Eric Shemi gets us a wrap of all that transpired on Wall Street yesterday.
U.S. stocks slightly lower on the session. The Dow off 27 points, the S&P down 5, and the Nasdaq lower by 18. The United States and China are reportedly exploring a trade pact that would stop additional tariffs from Washington in exchange for new talks to bring about major changes to China's economic policies. That's according to the Wall Street Journal. The report, citing officials from both countries' governments, comes as the G20 summit gets set to kick off in Argentina and says both sides are eager to curb mounting tensions between the world's two largest economies. Meanwhile, the number of Americans filing for unemployment benefits climbed to a 6-month high last week. The data could raise concerns that the labor market may be slowing. It's the highest level of claims since mid-May, the Labor Department said. And yet another Wall Street firm cutting its expectations for Apple amid fears of sluggish iPhone demand. Canaccord Genuity reducing its 12-month price target for the stock and lowering its 2019 and 2020 earnings estimates. Shares of Apple are slightly lower today and down more than 20% over the last 2 months. That's the action from the U.S. market. Back to you in Mumbai.
Well, on that note, let's also hear out some market experts what they make of the Fed minutes and also the outlook for the U.S. markets going ahead.
The yield curve steepened briefly. We had gold prices rally, the dollar soften, and as you know, equities up massively. The market is right. Economists, as per usual, are wrong. This was a game changer. Neutral rate is an absurd concept. It's a unicorn rate. It doesn't exist. The housing market is telling us right now, as I've argued for some time, we're already past neutral. So the Fed needs to really recalibrate its thought process, what it watches. It needs to stop raising rates, let the balance sheet unwind, and let there be some price discovery in financial markets to the extent that's possible.
There are a couple events that are going to be very binary in the next month. And people are looking, whether it's 2 rate hikes or 4 rate hikes, that's meaningful. And the way that the market has been reacting in the last 9 months, I would say since February, to news is the market is reacting to sort of news on the margin, and the market is reacting to really meaningful news. And so I think we have to be careful.
Well, European markets, they ended mostly higher yesterday. Remember, the UK banks, they passed the Brexit stress test. So that was good news. The FTSE and the CAC, both of them ended with some gains, while the DAX was a relative underperformer in yesterday's trading session, ending with a bit of a mild negative bias. Now, all attention shifts over the weekend to the G20 summit and what's going to come out of there. For starters, we know that Peter Navarro is going to be out there, and he's the China hawk. So that's not going to be great news. But let's see what happens at that dinner.
Okay, yes, all eyes on that particular dinner, but let's move on and take a look at the currency space as well, because the dollar index is currently trading below the 97 mark. Remember, we had seen some strength in the dollar index in the previous session on comments by the Federal Reserve chief that was seen as a sign that the rising trend in US rates may be coming to a close.
And the all-important commodity focus, then crude oil prices, they rebounded a tad bit from yesterday's session lows. This after industry sources said that Russia had accepted the need to cut production, and together with the OPEC ahead of the meeting next week. However, Brent crude prices, even after the bounce that we've seen overnight, is still trading below the 60.
Well, back home on the last read, the benchmark indices closed at 2-month high levels. The Nifty ended above the 10,850 mark and thus posted its biggest gain in a series since March 2016. The Sensex ended with gains of over 450 points and topped the 36,000 mark. The Bank Nifty as well rallied close to 500 points, but it was the mid-cap index that relatively underperformed, ending with gains of just 0.5%. But that was about yesterday. We are entering a new series, and Manglam joins us to tell us how the cues look like. Manglam, good morning.
Good morning, Anisha. The cues look fairly good because, as you rightly pointed out, the November series was the best series in absolute and percentage terms since March 2016. However, this also came after the October series, which was the worst since September 2008. So we have to keep that into perspective. That said, the bulls were on top, 734 points added on the Nifty. This after a 1,500 point rubbing that we've seen in the last couple of series. So let's take a look back at how the series panned out. While the Nifty and the Sensex gained about 7.5% each, it was the Nifty Bank which led from the front, 8.5%, and out there it was the PSU banks that did fairly well. What did not do too well was the IT stock, understandably on account of the stronger rupee and the volatility in metal prices, taking the metal index lower too. So a few of the index gainers, we have UPL, which surreptitiously gained about 30% this series. Ultratech, after the deal announcement that came in, gained about 20% this series. Reliance, BPCL as well as L&T too, putting anywhere between 15 to 19%. Interesting shift that took place in the banks. Yes Bank, we've been talking about that, down about 50% from its top. We talk about valuations, but there are a lot of concerns with regards to Yes Bank, down about 20% this series after losing in the previous series as well. Kotak Mahindra and HDFC Bank gained about 1.5% and 8%. But if you compare that to the sort of moves that we saw in public sector bank or public sector leader like SBI or corporate facing banks, you would see that there is a marked outperformance of the corporate facing banks as well as SBI as against the others. Another thing that really stood out was the FII flows. FII flows have been very strong over the last 5 trading sessions. We've seen purchase. Last 3 trading sessions have been upwards of $100 million. So all of this optimism goes into the November series. The rollovers have been slightly stronger, 71%. This compares with 69%. And in there, the long rollovers have been slightly stronger as well. 51% longs at the start of the series, which compares with 29% at the start of previous series. So what are the big triggers? For today, there are 3 big triggers. One, post-markets, there will be the GST meet. Secondly, we will have NBFC stocks, whether they will be in focus or not, as RBI has relaxed norms for securitization transactions. This is only for long-dated bonds. So let's see how much of that this moves the needle. And the Trump-Xi meet at the G20 summit. That's as far as today is concerned. For the remainder of this series, we have the RBI policy outcome on December 5. We have the crude OPEC meet on December 6th. Busy election season election as well. Election results on December 11th. And finally, it's December party time. FIIs go on holiday. So let's see whether flows thin or not.
I imagine, Mangalam, the teetotaler partying really hard.
I'm not partying. I'm talking about the FIIs.
So I know, they're going to. The flows will be something that we'll have to keep an eye out on, because volumes are likely to be thin. And keep in mind, Mangalam, we are keeping an eye out on what's going to happen between Trump and Xi Jinping, but also Peter Navarro.
Yep.
He's attending.
His presence has now spooked the street.
Yeah, he's going to be at dinner all of a sudden. So they are not going to be happy. But let's see. Let's hope that.
They say two's company, three's crowd. Let's see what happens.
All right. Let's find out what are the stocks you're looking at, Mangalam, for today.
Stocks. I'll start off with the NBFC space, because RBI relaxed norms for NBFC. But let's see how much that moves the needle again, because the relaxation is only for long-term loans, which are 5-year plus. Add to that, keep an eye out on Vodafone Idea. The stock has taken a bit of a drubbing, in fact, a fair amount of drubbing, and now we've got a downgrade coming in from CRISIL. They've maintained their negative outlook. The downgrade has come in from AA- to A+. Watch out for Piramal Enterprises, because over the last few trading sessions, that stock has been volatile. Exposure to Lodha was the key concern, and then thereafter, the Lodha management came and clarified on CNBC TV 18. We saw some gains come by on Piramal. Now we understand from sources CNBC TV 18 exclusive that Lodha is likely to raise about 5,000 crores to reduce debt. So does that mean it's good news for Piramal or not, is something that the street will be watching out for. Repco Home Finance, there was a bulk deal yesterday. Influential investor Pabra Investment Funds sold about 1.5% stake in the company. Mahindra Logistics, their promoters sold stake by about 2.3%. The person who mopped up the stake was Reliance Mutual Fund, 1.5% higher out there in terms of their stake. Marico, Citi said that 35% reduction in copra prices is actually much more than what the management had guided for. So on the back of that, while they've maintained their EPS estimates, they've raised the volume estimates for this year, and they have a target price of 430 on Marico. GSK Consumer and HUL, let's keep an eye out on whether the deal comes by or not. Whoever gets to take a sip of Horlicks, because both the companies have notified the exchanges. They haven't denied evaluation of opportunities, but they've refused to comment on the deal. And finally, we will keep an eye out on Shankara Bilpro. Today is the conference call that the management is holding with analysts with regards to the business update. Remember, the stock has corrected about 70% from its peak.
Oh, well, yes, we will want to watch out what the management has to say on that particular call. But you also mentioned about some relief coming in for NBFCs after RBI eases norms with respect to their loan book securitization.
Rules for non-banking financial companies with respect to their loan book securitization. This in a bid to provide some liquidity to the sector. Ritu joins us to help us out and understand all what's happening in terms of the space. Ritu, what do the changes suggest?
RBI has relaxed rules for NBFCs to sell or securitize their loan books in a move that will help ease some of the persistent stress that we've been seeing in the sector. So now NBFCs will be allowed to securitize loans of more than 5-year maturity after holding them for 6 months on their books, as opposed to the earlier norm that required them to hold on to these assets for at least a period of 1 year. However, this relaxation on the minimum holding period will be allowed only when the NBFCs retain at least 20% of the book value of these loans, instead of what the earlier norm was of about 10%. Primarily, this move will benefit housing finance companies because their eligible portfolio available for securitization can now increase on the back of these norms. Separately, in another notification, RBI has also operationalized the 5% interest subvention rules for small and medium enterprises, which would essentially help them get pre- and post-shipment export credit on easier payment terms. This again is in line with what the government has been trying to do to boost credit flow to the MSME sector. Do remember, concerns over liquidity and some sort of support to MSMEs have been one of the key areas of discussion, if I were to put it that way, between the central bank and the government. So these moves will certainly help matters in the December 14th board meeting of the RBI.
Thank you, Ritu, for that. So keep an eye out on NBFCs and trade today. But new back series GDP data released by the government came under much attack after the average growth rate from fiscal year 2006 to 2012 was revised lower from 8.2% earlier to 6.9%. Now, we spoke to Sudipto Mundle, the chairman of the Committee on Real Sector Statistics, which was constituted by the National Statistics Commission. Now, his report has actually been withdrawn by the government, which termed it experimental. Now, he said that it is unfortunate that statistics like GDP has become a subject of political slugfest.
It's very unfortunate that, national statistics, whether of GDP or anything else, becomes the subject of a political slugfest between the ruling party and the opposition and so on. This is really not the healthy way in which you want to generate data. And I have one takeaway from all this for all of us is to try and ring fence the statistical production system from government so that these types of controversies don't arise. When my committee was meeting, and by the way, the CSO was the secretariat for my committee. This is not something that they
didn't know about.
From.
Okay.
So, they were there, and we kept requesting them for 1 year to complete whatever work they were doing, but they said they were doing some calculations with their new numbers and so on.
All right.
Till last July, they did not, and if they had a problem with what the numbers that were being put out then, they could have written a note of dissent or something. There was nothing like that.
Okay. Can it be that the GDP rate is so much lower compared to the current period when savings rate has dipped below 30%, and we are apparently showing a higher average growth of 7.3. The average for those 7 years, I calculated in the new series, it comes to 6.9. Doesn't this look a little difficult to gel?
The investment rate, which is what matters, had peaked just before the global financial crisis in the year 2007-8 at somewhere around 35% and is now down to around 28%. Or thereabouts, and it's been steadily coming down. It's not as though it's suddenly come down.
Yes.
It has been coming down. Now, in that particular year of 2007-8, because you're talking about internal consistency, I think that is the important problem. We can't really discuss data source and all that without getting into indeed. But the internal consistency, I think there are some issues, which I think the CSO needs to look at, because somebody or the other these numbers are now going to be scrutinized very carefully, and people will raise these questions. One must always be careful when producing GDP estimates and so on to keep an eye on whether it is consistent with everything else. This is what you might call triangulation, that other sources of information, does it fit? And I mentioned a couple of them. You are mentioning another one about, credit, and I agree with you that these are questions that, the CSO must now think about addressing, because people will ask these questions.
Do you think the presentation of the data should not have been by Niti Aayog? That gave it a political color?
Well, I mean, they have a role in this, but on hindsight, I think it may have been in the interests of the government to let, Mosby deal with it and maintain a distance.
The GDP data for Q2 is due today. Ekta is with us to run us through all the expectations. Morning, Ekta. What do we expect there?
Well, morning, Nigel. This GDP data is again going to be backdated information that we're going to work with. But nonetheless, it is important to give an overview in terms of where we are when it comes to growth. Now, I just want to point out for this time round, the GDP for Q2 is expected to come in at 7.4%. This will be a slowdown as compared to 8.2% in the last quarter, which was in fact at an 8-quarter high. And the GVA as well is expected to soften to 7.3% versus 8% on a Q-on-Q basis, but on a year-on-year basis, the growth is expected to continue. So 7.4% in an estimate on the GDP compares to 6.3% year-on-year and compares to 6.1% for the GVA on a year-on-year basis. Now, I just want to point out that the reason why we're going to probably see this softness Q-on-Q is expected to be led by slower industry as well as agri growth. Services, however, is expected to see momentum improve on a sequential basis, and services is likely to be aided by higher government spending, which would be probably public administration. So keep your eye out on that particular figure within the services constituent. Now, in terms of agri, it's expected to slow down to around 3.7 versus 5.3% Q-on-Q, but grow versus 2.6% same time last year. And also agri has been steady despite erratic monsoon. Food grain output has been up around 5% odd. Within industries with construction is probably expected to slow down to around 7.3% versus 10.3% Q-on-Q, but grow at around versus 6.1% year-on-year. Now, within industries, watch out for manufacturing. That would be the key constituent. The range is wide, anywhere between 7 to 9% versus 13.5% last quarter. So there is a slowdown which is expected Q-on-Q, but year-on-year, the growth should look good for the GDP. Okay, so some moderation perhaps on a quarter-on-quarter basis, but annually you should see some steady growth coming as far as GDP goes. Talking about some national news then, more than 1 lakh farmers will march to Parliament Street today, demanding special Parliament session to discuss the agrarian crisis. Now, the two-day Kisan Mukti March has been organized by All India Kisan Sangharsh Coordination Committee, which is a confederation of around 200 farmer groups. The farmers also want complete relief from farm loan debt. Remember, protesting farmers allege that the centre has failed to address the farm crisis. Now, this is the third time farmers march in 3 months. Yogendra Yadav of Swaraj Abhiyan is leading the march in Delhi today. Listen in to what he had to say.
एक मांग है और वो ये कि संसद का एक विशेष अधिवेशन हो और उस विशेष अधिवेशन में सरकार 2 कानून पास करे जो कि लोकसभा राज्यसभा के सामने हैं, पटल पे रखे हैं। पहला कि किसानों को उनकी संपूर्ण लागत का 1.5 गुना दाम मिले, कानूनी गारंटी से मिले, और दूसरा किसानों का जितना भी कर्ज है वो एक झटके में समाप्त किया जाए। कम से कम एक बार, रोज रोज नहीं, एक बार किसानों को कर्ज मुक्त कर दो, उसके बाद उनकी मेहनत है, उनकी किस्मत है, वो देखा जाएगा।
Well, we also spoke to veteran journalist P. Sainath, who says that while political parties make announcements on waiving the farm loans, there is little progress when it comes to execution. Let's listen in.
The announcements of loan waiver, of course there are political parties that will make them announce them, and then you don't really have anything happening on the ground to implement them. Maharashtra is a classic example. The loan waiver is a relief, it is not a solution. It's not. It cannot be, because there are much bigger problems. Unless you tackle the credit structure, the farmer will return to the same situation the next year. The Swaminathan Commission report, and for God's sake, the report was not just about loan waivers, it was about 100 things, okay? And this is why you need a price stabilization fund. You need a price stabilization fund. You've had that sometimes invoked in the case of petroleum, for instance. Demonetization caused devastation in prices across the country, and Adivasi farmers who had shifted from subsistence food crop to crops like tomato and had taken 30,000 to 2 lakh loans were devastated when they found their tomatoes selling at 20 to 25 paise a kilogram. Now this, I'm warning you, is going to keep happening. It's going to keep happening because of the way you've thrown the farmer and producer to the wolves.
Well, let's take a look at how the Asian markets are doing, because the last time I checked, Nikkei was holding up in the green with a gain of around 42 points. The early rates from Hang Seng are also positive, up around 80 points and actually 40 points as we speak. And Shanghai also has opened up well, up around 0.4%. Remember, all eyes will be on the summit, the G20 summit in Argentina this week, wherein President Donald Trump and Chinese Premier Xi Jinping are expected to meet. So the Greater China markets perhaps will be looking forward to that particular meeting. Kospi is the other one that is underperforming a tad bit, because that is the only Asian index that is sitting with a cut of around 0.2%. But other than that, the Straits, the Taiwanese index are up around 0.3 to 0.5%. And even if you look at the SGX Nifty, now after the monster rally that we have seen in the month of November, it looks like today as well we are going to have a positive start, over the 10,900 mark and a gain of around 24 points. But as we've been pointing out, November series has seen quite a bit of gains of over 7%, both for the Nifty as well as the Sensex. Now we know the headline numbers, but Nigel will break it down for us, tell us the hits, the misses, and break it down, Nigel, for us in terms of the other data points.
Well, it's a fabulous November series. We're getting to November series. The FIs were net short as well, and that's been a blessing in disguise actually, because when you see a lot of short positions in the market, then you have a bit of a short covering bounce as well that plays out. So if you're looking at it in rupee terms, yes, we gained around 7.5%, but that's the important point. In dollar terms, given that we had a 4.5% appreciation in the Indian rupee, it was a 12.5% gain in dollar terms. And just take a look at it. On a series-wise basis, we are moving between around 6 to around 700 points approximately. So if we go by that calculation, either we end this particular series closer towards 11,400 mark, or we end it closer towards 11,100 mark. By the way, that data point wasn't very, very correct, because the last two series we were down more than 700 points, and in this series we were up nearly around 733 points. Short point, we had the best series since March 2016. So it was a good run. After you have two big down series, you have 700 points. The bulls will take it with both hands. The Nifty was up 7.3%. The Sensex was up 7.4%, and the Nifty Bank did even better. It was up nearly around 8.5%. So great going out there. In terms of which indices do well, high beta normally does well. PSU banking stocks, they got smashed in the last two series. They bounced back. Real estate bounced back as well. And in fact, the auto space as well looked quite good. Remember, the small cap index was up 6.7%, but it was an underperformer in comparison to what the headline index did, telling you that most of the money is flowing to the large caps now. That's been the case in the last series at least. Big names that gained from the Nifty itself. UPL was up 30%. You had Ultratech Cement that bounced up close to around 20%. Now they have Binani Cements in the bag, so that stock did well. The big names that did well, L&T did very, very well in the last series. You had Reliance Industries as well as ICICI Bank. When those heavyweights move, they definitely support the Nifty's up move as well. And big boy, HDFC up 15% odd. Who lost out then? Yes Bank continues to see selling pressure, down 20% for the last series. And even JSW Steel, given that we had such a big cut on Chinese steel prices, that stock as well lost close to around 10%. Even Sun Pharma was down more than 10% in the past series. But big gainers, yeah, there were quite a few. Infibeam, highly volatile stock, that was up close to around 40% odd. Adani Power did well. Jet Airways, that deal will come about or not, we'll wait buy out them. That stock as well gained more than 30% the past series. And Raymond looking like the complete man, at least for the last series. That stock was up close to around 30% odd. Finally, big losers, a whole host of them. Some of them should come up for you on the screen. Equitas, CESC, you had SAIL, Page Industries. All of them lost out big time, actually. A short point, great series. The bulls will feel good. Start of the series, pessimism. End of the series, optimism. Let's see whether or not Santa comes to town. And in fact, we have a big rally towards the end of the year. But going by the last few series, Anisha, it's been a 600-point move. I don't know whether we're bracing ourselves for another 600-point move. Given the kind of cues that we have Trump to look at, we have state elections to look at, and RBI policy meet as well. So let's wait by.
Oh, well, yes, a lot of factors to track as far as the December series goes. And in the month of November, we actually saw the FI also come back to the market, a 4,500 crore inflow, and 13 out of 18 sessions actually bought into the Indian markets. But let's move on and talk about stock-specific action. Tata Motors will be in focus today as JLR make pause production at its engine factory in UK. Sonia Shenoy joins us with the details. Sonia, good morning. Tell us, is it more bad news for Tata Motors?
Oh yes, more bad news, definitely. If you remember, the Solihull plant earlier was shut for about 2 weeks because of, to maintain operational efficiencies. And now, according to news reports, their Wolverhampton plant in UK may be shut for a few weeks because of the same issue. Now, because of the shutdown, there will be about 500 full-time employees that will be affected on account of the 2-week production freeze. The affected staff, though, will continue to receive a full pay during this time. The same old reasons, Brexit uncertainty, a decline in diesel car demand, and lower sales in China is what really has hit JLR quite a bit, and they've decided to go slow on production. UBS has come out with a report today where they've cut the target price on Tata Motors to 200 versus 280 earlier. They say that the recent sharp fall in China volumes is very worrying because the Chinese market is the highest profitable market for them. They also say that they're turning more cautious on the Indian truck market, and they've cut estimates over there. So they've cut their JLR global volume growth estimates as well. They now expect a negative 5% by the end of FY19 and down 1% in volumes by the end of FY20. So perhaps the stock could be in the red.
We have been tracking crude oil prices on a day-to-day basis, and Manisha Gupta joins us to tell us what's the latest on that front. Hey Manisha, morning.
Hey Nigel, morning. And well, we have seen the crude oil prices gain 2% yesterday, but we haven't been able to hold on to those gains in the Asian markets right now. So there have been all kinds of statements. The positive is that the Russian president now says that he is in agreement with OPEC and that they are working out the details on what output cut do they really need as they get into 2019. And that is what led the crude oil prices higher yesterday. But the markets still are looking at the oversupply. So whether it is the U.S. production, the U.S. inventories, the U.S. reserves, all of that has been rising, and the demand is still not matching there, and that is weighing on. Also, even as we are looking at such volatile moves, there is hardly any long positions that are being created in crude right now. So the markets clearly are waiting for the crude oil prices to settle in and then take a position in that. As of now, we do understand that the hedge funds, etc., are looking at some support to start accumulating positions, but that still is some time away. So volatility is what we will continue to see here.
Okay, so volatility is what we are going to continue to see, but let's move on and go across to Mangalam, who's joining us with how the cues are looking from the derivative space. Mangalam, over to you.
Well, it's the start of a new series, December series. So as we do, just take a look at the last 3 December series. Of course, this doesn't lay a bearing on how this one is likely to pan out. But over the last 3 series, if there is something that the bulls can take heart from, is the fact that it's only gotten incrementally better. 0.8%, 1.7% and 2.5%. Although last 3 November series haven't been good. So this is something we will keep an eye out on. 734 runs made by the bulls this series. The rollovers have been higher, 71%. This compares with 69%. Now, optically, it looks like just a 2 percentage point higher rollover, but the long positions, they were rolled over to the tune of 74%, while the short positions were rolled over just by about 51%. So that's telling you that after a 700-point up move in this series, the bulls are a little more convinced of this continuing in the December series as well. So the FIIs who started the November series with a 29% long exposure have now started the December series with a 51% long exposure. The Nifty open interest is pretty much in line with where it has been over the last 3 series, 1.93 crore shares, albeit a little lighter than what it was in the November series. Where are the markers placed? 10,500 put and 11,000 call is where the markers are placed for the December series. Yesterday we saw a fair amount of writing at the 10,700, 10,800 put and 10,900 call was fairly active too. The put call ratio at 1.74 is something that warrants our attention. We will keep an eye out on how this goes because there are a lot of triggers for this series. Of course, right from the GDP to the RBI policy meet. We have the OPEC meet. December, it is election season. 11 December are when the results come. And finally, FII flows. That is something we will be watching out for too.